Welcome to today's Explainer. We're diving straight into the three massive, totally contrasting forces defining August 12, 2026: geopolitics, markets, and the AI boom.
So, let's start with a huge, almost paradoxical question. How on earth is Wall Street surging to brand new record highs, while at the exact same time, massive friction is literally stalling the physical world?
To figure that out, we've got to look at that physical friction. This brings us to force number one: geopolitics and global energy. Specifically, the intense standoff unfolding right now in the Strait of Hormuz.
The lines here are firmly drawn. President Trump described the American naval blockade as a wall of steel, asserting total U.S. control. Meanwhile, Iran maintains the waterway stays closed until their political and financial demands are met, claiming Washington hasn't lifted existing port blockades.
The real-world impact of that? It's immediate and it's stark. Just 8 vessels were tracked moving through Hormuz on Tuesday. 8! That's a massive cliff dive from the 130 to 140 ships you'd see on a typical pre-war day. We're talking about a near-total halt of one of the globe's most vital shipping arteries.
And this bottleneck isn't just a localized issue. It's making a broader global energy crunch so much worse. The International Energy Agency is projecting a severe global shortfall of 4.3 million barrels of oil per day. That kind of sudden supply shock, it sends immediate ripples across the entire global economy.
But here is where the narrative takes a major turn to our second force: cooling inflation, hot markets, and domestic economic relief. Because despite that global energy shock, falling gas prices have actually helped cushion things here at home. July's data is showing a clear, undeniable cooling trend across the board. Consumer prices ticked up just 0.1%, annual inflation slowed down to 3.4%, and core inflation hit 2.5%. This matched economists' expectations perfectly. It really looks like the inflationary fever might finally be breaking. And because of this milder inflation, traders are now giving it a 62% probability that the Fed will pause rate hikes in September. That is sending a massive wave of relief through the markets, giving investors the exact confidence they've been waiting for.
Which brings us to the third and honestly most powerful force of the day: the AI infrastructure boom. And this one is completely defying physical world constraints.
Just look at the unbelievable shift happening at Foxconn right now. For the first time ever, AI servers made up over half of the company's quarterly revenue. That's a 51% share, completely eclipsing traditional consumer electronics like iPhones. This is a monumental pivot in how these hardware giants actually make their money.
All of this very real, measurable demand for infrastructure triggered a massive stock rally across the whole sector. It kicked off with CoreWeave surging 19% right after they raised their capital spending forecast.
Then, Nibius Group shot up a staggering 28% as investors confidently piled right back into data center infrastructure.
And Supermicro jumped 18%. Combined, this relentless AI-fueled optimism actually helped push the S&P 500 to a brand new record high, right near 17,750. But even as the digital economy just roars to new heights, physical constraints are still compounding global friction. We're currently seeing a massive Saharan dust plume hitting Texas and the Gulf, severe thunderstorms battering the Ohio Valley, and extremely dangerous 108-degree heat baking Florida. So, the ultimate takeaway to leave you with in today's Explainer, as we watch these three forces literally collide: how long can our booming digital infrastructure and market optimism outpace the very real physical and geopolitical risks out there in the world? It's an absolutely fascinating balancing act, and definitely one we're going to continue to watch closely.